Good morning, everybody. Thanks for tuning in to our MMG weekly recap. So the jobs report came out, right? We had a lot of noise this week where mixed signals on the strength of the labor market. Well, we got the jobs report, and the headline number was, a head scratcher at 336,000, way beyond anybody's expectations. And when you had the bar set low going into it because of this ADP print on Wednesday, which showed 86,000 private payroll creations, we had 100, we had a big number of private payroll creations, 263. We were looking for 160,000 private jobs. 263,000 were created, multiples of what Wednesday's ADP showed. So that number, the bond market just drove off a cliff. If you weren't watching it with us at 8:30, good for you, because we were down like 100 basis points, but we've recovered more than half of it. And we'll see if we can hang around near 99.50. The trend is still lower, still not our friend. And the 10-year note at 482 to 484, below the peaks, but still in a bad way. Listen, a couple things that we're thinking about. Number one, the hourly earnings was good in as much as it's not rising, so that alleviates some inflationary fears. And then to take some of the shine out of the number, the household survey only showed the labor pool expanding by 90,000, and it only shows 86,000 more people employed. So you have this noise, 336,000 in the establishment survey, which is the business survey, and in the household survey, which you can almost argue is more accurate, calling on households, that shows 86,000 people employed. So there's a lot of noise in this job number. The bottom line is, this emboldens the Fed. The labor market is tight. We still have mixed signals. And so, we can't fight it. Now, we got to look ahead to next week. Next week, we have, by the way, a short week. Remember, the market's closed on Monday, so we'll be back at it on Tuesday. But we have CPI and PPI. CPI could be hot because energy in September went crazy, right? It has since cooled off a bunch in the last 10 days. But for the month of September, it was hot. So it wouldn't surprise us to see a hotter print. We got to be careful with that. So you got to lock loans still where you can. It was a head scratcher jobs report. The bottom line is housing. We need jobs to buy homes. So it's a good thing, but it's keeping the Fed probably with the tougher talk as we head into the weekend. I hope this finds you well, and we'll see you on Tuesday. Bye for now.